Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Polygon's 𝗕𝗃, specifically taking a look at how much 𝗕𝗃 we need in our portfolio if we want 𝗕𝗃 to drive a $1 million return on investment. Now, as I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, what are you waiting for? Check it out. The link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out. So what we're going to do is we're going to go into the charts for Polygon's 𝗕𝗃, and we're going to basically need a couple of things. Okay, so the first thing that we're going to need is to essentially ascertain how low we think the price action is going to be going so that we can be predictive over where we think the future price is going. Okay, and what I mean by that is how low can we go before we see the next bullish market, and in the next bullish market, how high can we go? When we know, where we can buy and where we can sell, then we can be predictive over we're building that portfolio, what that portfolio looks like, how many tokens and all that kind of good stuff. So here we have Polygon's 𝗕𝗃. This is a USDT pairing. We are using a weekly chart, and Binance is the data source here, right, for this one. So with this, we can see that there is still this real bearish move for Polygon's 𝗕𝗃. Okay, it still looks like it wants to go down towards 10 cent to 17 cent, right? So it's incredibly bearish. Now, you might not like that. You might completely disagree with that. It's all fine. It's entirely up to you how you kind of feel about that. And for the most part, we have seen some pretty decent dollar cost averaging opportunities, specifically around 31 cent, as we saw this initial pull to the downside from the 2021 highs. And so we had a great run in the latter part of 2022, and most recently in February 2023, we pushed up one more time before we really have aggressively come down. And, we are still looking quite bearishly here. We are below the 200 EMA, although the 50 EMA and the 50 SMA are above, it still looks like it has to come on down. So for the purpose of today's video, where we can dollar cost average, I think I'm just going to go with the existing low at 31 cent. Even though I think there's going to be better opportunities, meaning that the investment that we make into Polygon's 𝗕𝗃 could potentially be significantly lower than what this video is going to make it out to be. So just bear that in mind. Now, based on a move to 10 cent down here, that gives us the most conservative run or most conservative bull run that we can drive, right? The higher that this goes up here, the higher the price will be in the bull market, right? So if I keep this nice and low at 10 cent down on the low side, that will allow me to zoom out of here just a little bit and see the potential moves to the upside overall. Okay, now these moves to the upside, they allow us to take a look at this and say to ourselves, okay, we have a conservative price target range. This is the 618 to the 786 fib scale. That's $4.44 upwards to $12.36. Now, considering we had a very nice run to the upside previously, and I don't think this is going to change in the next bullish market, considering the demand that there is for these scaling applications or layer 2s onto the layer 1s, I think this is still going. Polygon's 𝗕𝗃 is still going to perform incredibly well, even after a very significant sell-off here. And so we did see 109,000% move, right, from the lows that we saw in 2019. Now, if we were to mirror those, we would be looking at $46 to $195. I don't think we're going to be pushing that high, but it's interesting to kind of see that there is potential for those kind of moves to the upside in that particular manner. Okay, I think we have to be a little bit more conservative with it. I don't think we're necessarily going to see Polygon's 𝗕𝗃 move that high, but, we could be surprised by everything that we see here. If we actually take a look at the tokenomics for Polygon's 𝗕𝗃, you can see that there's a maximum supply of 10 billion, right? And that's actually really quite low. So we could see an interesting move to the upside here for Polygon's Matic in that next bullish market, should things really go in the favor of Polygon. It's currently 93.1% is circulating. So with all that in mind, and the idea here is that we can see $4.44 to $12 being the conservative side, $46 being on the high side. That allows us to be thinking about, okay, well, what if we only looked at the conservative target range? Let's say we aim for a $7.50 price target for Polygon's Matic. How many tokens do we need to drive that $1 million, right? And for that, what we're going to do is we're going to bring up the Excel spreadsheet that's going to help kind of drive that out, right? So we have the future price, our target price would be our target return on investment being $1 million, and that's going to drive out the quantity that's needed. We then have our average purchase price, which we're going to take 31 cents for. That's going to give us our cost basis, and then it's going to drive out the profit, the tax, the bill that we'd have to pay, and then the net profit at the end. So let's go with a $7.50 being a conservative range target for the future price appreciation of Polygon's Matic. That means that we would need to build a portfolio position of 133,333 Matic in that portfolio to drive that $1 million. Now, if we were to pay an average price of 31 cents, it means we're investing $41,333 to drive $1 million. Essentially, our profit would be $958,667. Our tax bill would be $191,733 based on the UK 20% capital gains tax. Again, that may change in your jurisdiction. In this example, that would drive out a net profit of $766,000. But again, that's the conservative target. If we hit the $12 range, well, then actually all you really need is 83,000 Matic at an average price of 31,000. That's going to be a $25,000 purchase, and you're going to be driving out $779,000 after tax. But what if you were able to hit $46? If you were able to hit $46 on Polygon's Matic, that would be that you would need 21,739 Matic in your portfolio to drive the $1 million, average price being 31 cents. $6,739 investment, profit being $993,261, tax bill being just short of $200K at $198,652, profit after tax $794,609. So you could see here that there's actually a pretty interesting way of kind of looking at the market. Whether or not you are super bullish thinking $46 is possible, I think realistically $12 is going to be a stretch, but we'll be interesting to kind of see how that plays out, considering the next bullish market I think is going to have such a huge spotlight on it with the Bitcoin spot ETFs, Ethereum spot ETFs. I think we might see Polygon's Matic perform astonishingly well. So we'll see how it kind of does plan out. But for the most part, this gives you a bit of an idea as to kind of, what kind of portfolio position do you need in order to drive $1 million from your Matic investments. Let me know what your thoughts are on all of that down in the comments below. But I think that's going to wrap up today's video. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.